Hello and welcome to News Blitzer analysis of Budget 2025. The Union Budget of India 2025, presented by Finance Minister Nirmala Sitharaman, has been met with significant criticism from various quarters, including economists, industry experts, and political leaders. The budget has come in for criticism as well as selective praise. Here are 4 pros and cons of Budget 2025. The 4 major areas of concern along with others include: Number 1. Questionable impact of tax relief measures. Moody's Ratings has expressed skepticism regarding the budget's tax relief initiatives aimed at the middle class in India. The budget proposes increasing the non-taxable income threshold to Rs 1.28 million and reducing tax rates for higher income brackets. However, Christian de Guzman, Moody's senior vice president and lead sovereign analyst for India, differs. He questions the effectiveness of these measures in stimulating economic growth, emphasizing that capital expenditure on infrastructure typically provides a more sustainable boost compared to tax cuts. Moody's has maintained its growth forecast for India at 6.6% for the next fiscal year, which keeps India stuck in the middle income bracket, making the rich richer and the lower middle class and those below poorer. Number 2. Insufficient capital expenditure allocation. The budget outlines an allocation of 11.21 trillion rupees for infrastructure development in the financial year starting April 1. This modest increase has disappointed analysts and investors, leading to declines in infrastructure and cement stocks. Companies such as Larsen & Toubro and several cement firms experienced notable slump in stock value following the budget announcement. The budget is perceived to favor consumption over infrastructure development, raising concerns about the adequacy of investment in long-term growth drivers. At the same time, there have been significant cuts in social services allocation, 16%, housing, 4.38%, SC/ST welfare, 3%, social services for welfare, 5%, and food subsidy, 1%. Number 3. Stagnancy in cryptocurrency sector. The Union Budget 2025 has maintained the existing tax structure on VD as. While regulatory clarity remains, the lack of revisions, particularly on the 1% TDS and the inability to offset losses, continues to pose challenges for investors, traders, and industry in the cryptocurrency space. India leads in grassroots crypto adoption, yet the high tax burden has driven many participants to offshore exchanges, reducing transparency and limiting domestic market growth. A more balanced approach and allowing loss offsets could have encouraged sustainable participation and innovation. Number 4. Shades of bias. The opposition's India bloc, including parties like the Congress and Trinamool Congress, has criticized the budget for failing to address key economic issues. They highlight concerns such as stagnant real wages, lack of buoyancy in mass consumption, sluggish rates of private investment, and a complex goods and services tax (GST) system. Congress leader Jairam Ramesh stated that the budget does little to address these challenges, offering relief primarily to income taxpayers without tackling underlying economic problems. While on one hand the budget has been criticized for these shortfalls, at the same time, there are also some aspects of the budget that offer hope. Here are the pros of the budget. Number 1. Union Budget 2025, focused around transformative growth and a Viksit Bharat, offers substantial opportunities for the Indian information technology sector. The significant investments in skilling and upskilling are particularly noteworthy. The establishment of 5 national centers of excellence, leveraging global partnerships to deliver cutting-edge curriculum and training, will directly address the burgeoning demand for skilled professionals in areas crucial for Make in India and global competitiveness. The expansion of IITs and the new AI Center of Excellence for Education will further bolster the talent pipeline, ensuring India possesses the expertise needed to lead in emerging technologies. The announcement of 10,000 fellowships for tech research at IITs is a significant step towards strengthening India's technological landscape. By supporting research in emerging fields like AI, Web3, blockchain, and cybersecurity, the effort will promote top-tier talent. The effort also positions IITs as global hubs of innovation. Number 2. UPI-linked credit cards for street vendors. The Finance Minister's announcement in the 2025 budget to link UPI with credit cards for street vendors marks a significant step toward financial inclusion. It provides vendors with easier access to digital payments and credit, empowering them economically. This initiative will promote a cashless economy, boost transparency, and drive growth, benefiting both vendors and consumers while supporting the broader push for digital financial services in India. Number 3. Healthcare for gig workers. The Budget 2025's emphasis on healthcare for the gig workforce, if successful, will be an important step toward ensuring financial and health security for millions of independent workers in India. Access to quality healthcare should not be the privilege of a few or tied to full-time jobs but a fundamental right for all workers in all categories. This recognition by the government is a strong reaffirmation of the evolving workforce dynamics and the need for inclusive health benefits for all citizens. Number 4. FDI for insurance companies increased to 100%. The decision to allow 100% FDI in the insurance sector is a shot in the arm for India's financial landscape. It will infuse much-needed capital, improve insurance penetration for segments like SMEs, startups, and gig workers, and enhance competition. With global expertise and resources, one can expect better risk management, smarter underwriting, and more tailored solutions for businesses of all sizes. This move could strengthen India's insurance ecosystem. In summary, while the Union Budget 2025 introduces measures intended to stimulate the economy, it faces criticism for potentially lacking sufficient focus on sustainable growth drivers and for not adequately addressing structural economic challenges. How it is all going to pan out depends on the government's track record, and this track record is not encouraging. On the whole, the economic status of the country across the board is in poor state and not much change is expected in the competent implementation of budgetary provisions. Do let us know your views on the budget, and if you have not done so already, kindly subscribe to this channel for cutting-edge news reports and analysis from the best of the best. Thank you once again for watching this video.